Is this thing on? It's been too long. A lot going on with my personal real estate, with the real estate market, with the National Association of Realtors, with mortgage rates, with the coin of the bits, also known as Bitcoin. So we're going to have to cover all that. I get to all that with one-man production here. Got to fade my own music out. What a shame how far we've come. Radio shows, television shows, and now podcasting. So a couple things. We're going to start at the top here with NAR settlement. Now, most important thing to understand about this is nothing's really a done deal. I mean, there are a few facts that are done, but the proposal by NAR, the $400 and some million piece, that's just a proposal. Nobody's been, so none of this stuff is in stone yet. So the most important thing I want people to sort of think about this is that we don't really know. And anyone who says they know, they don't know. However, there are a lot of people who think they know. And so there's this article, which I thought was decent, which basically says, hey, don't believe some of these myths. The settlement forces brokers to reduce their compensation. Not true. You can't advertise it in certain places, blah, blah, blah. So you're not going to be able to say, hey, this or that. And the sellers can still pay buyers agents commissions. They just can't list it on the MLS. There's a whole bunch of things that are really going to stay the same. The one big difference on this, and I'll put this link in the description. The one big difference on this, I think, is actually a big win, is that it's going to force buyers to enter an agreement with the buyer's agent. Now, you can still do that prior to July. You can do that right now. Buyer's agent can have you sign what's called a buyer broker agreement. A lot of agents don't do that because it scares a lot of buyers off. But if everyone has to do it, I think that's going to be tremendous. I think that will create a lot more carefulness. I think people sort of don't know how the business works. And so sometimes they'll short side an agent. It's really just tough to watch. Where they, work with someone for a little bit, and then they walk into an open house and they work with someone else and they buy the house, and the agent calls them, hey, what's going on? Oh, hey, I bought this house. And they don't even realize they screwed that person over. So I think that is going to be good. If it gets buyers to say, I have selected my agent, or I have to select an agent, I have to in writing say, this is my agent. I have to in writing break up with this agent to hire a new one. I think that officialness is going to be really good just for the integrity of the whole process. It'll force people to actually take a look. Okay, who is this agent? Do we really want to get hitched to them? Make that decision instead of going, we'll use them for some information now, but then, we'll probably end up using somebody else. Get rid of that. And so if we get nothing else from this, but that, I think it's a huge win. Now, there's other things that could happen that could be good. There's other things that could happen that could be bad. I do believe that the people behind this want to nuke buyer's agents. This is going to be their chance. If they're ever going to be able to get it done, it's going to be right now. The opinions from DOJ on this, not pretty. Not pretty. I'll actually post that link in the description too. Doesn't appear that DOJ is on real estate's side here. So we'll see. We'll see what happens, but none of this stuff is done yet. Please keep that in mind. All right, we're going to do a little bit different today. We're going to jump into market stats before we get to articles, before we look at some summaries of stuff. Before we dive into charts for mortgage rates and Bitcoin and stocks, before we do any of that stuff, we're going to look at this. So we're going to do this, then we'll look at mortgage rates. Now, if we just look at San Diego, and I'm always looking at San Diego proper on this Altos Research, the exact same report. If you ever see me pull this up, I'm pulling up the same one. It would appear things are slightly chilling out a little bit. Remember last month, the market index, market action index, that's what I was looking for, was at 66. It's at 62. So it decreased. Still in strong seller's market territory, though. So still very much in sort of a very strong position. Oh, sorry. No, it was 62 last month. This month is 66. It actually increased slightly. So slightly more of a seller's market. Now, that would make more sense when we look at what's happening over here. These are the summaries. So price per square foot. And this just goes back just 3 months. So look, just back 3 months, price per square foot was at $759. Now we're at $795. That's the most important metric to look at. $759 to $795. That's a pretty big jump, guys. That's like 5% in 3 months. So that's the price per square foot. Also, watch average days on market decreasing. Look at that, going from 55 a few months ago down to 43. These are strong signs. Median days on the market went from 35 to 14 in the last 3 months. I mean, goodness gracious, I got to have a button for that. Wow. Also, look at price decreases. I always like to look at this one. This is my sleeper metric. Prices decreased 39% of listings just 3 months ago, now down to 26. So that's also a very bullish sign, in my opinion. Not seeing very many relisted. Inventory seems that as though it's crept up a little bit, but it really had a big dip, and it's just sort of returned back to where we were 3 months ago. So these data points really show a bullish trend in real estate. And you can see here, market action index 3 months ago was 57. Today it's at 66. So very nice, smooth curve higher there. Every single thing we're looking at here is bullish for real estate, probably except for real estate, except for interest rates. I think interest rates are probably, let me drag this guy over here. Interest rates are probably the one like hangover item that has a lot of people stuck. A lot of people are stuck because of interest rates. Stuck in a house they can't sell because they have 2-something%. We've talked about this ad nauseum for how long these poor people are going to be stuck. Because it could take a while, it could take a year or two. Maybe rates will never get back to that. Maybe at some point you just have to bite the bullet, accept your huge piece of equity, and go from there. This is a mortgage bond chart right here, and we've been tracking this very closely because, as we bottomed, remember, I mean, for how many months was I telling you that it looked terrible? We were just making lower high after lower high after lower high. It was just god awful, and we couldn't get a break. And we gapped up, and then we gapped back down through the same spot. It was like, geez, please. And then we finally saw the first movement higher right here. And that gave us a breaker. And we had a breaker right there. And look at that. Came right back to the breaker and went higher. So this started to look really bullish. And that was like the first time, and this is back in October, that we started to really see bullish activity in mortgage bonds. Remember, we want to see mortgage bond prices go higher because that's going to translate to lower rates. So we got the breaker, yoinked it. Let me see if I can actually I don't have a fib on here, do I? That's my other chart. So looks like it's about 2.5. So we got a pullback here. Once we crested these highs right here, and that liquidity got taken by these candles here, we got a pullback. Pullback to where? The perfect order block, perfect bullish order block. Came right back to it. Boom, consolidated at the bullish order block, spiked out of it real quick, returned to it, okay, and then came back again. It's very bullish. Even though people are like, but it's going down. Yeah, what happens is when you have big buyers, okay, big buyers are smart buyers. And so, and this is going to be true for any market that you look at, by the way. I'll try to make this a little bit bigger. Any market looked at, I don't care. Doesn't matter. Big buyers are smart buyers. And so what they'll do is if they decide, well, we're going to buy here. So we're going to buy between 98.80 and 98.30. That's where we want to purchase. There aren't human beings doing this. It's all done by computers. So a human being will just say, we want to buy in the most efficient way possible, from this point. And so the computer will sit in here and it will make those buy transactions, but it wants sellers to think that they're going to win because it wants people to sell so that it can buy. And so it'll kind of bait these sellers, for a while, give you a red candle, make you think it's going down. And what'll happen when it spikes out of there like this and those shorts all cover, you get a little short cover rally, then they'll pull the bid back completely. Just rug it. Just stop bidding completely. And then price will fall really quickly. And that actually baits a lot more sellers to come in thinking price is going to go lower. And that's where they buy once again. So this looks very common. This is very, very common, price action to see at least this high get taken out and probably all of this. This is too clean right here. There's no way. So people are like, how can you be so sure rates are going to go lower? There's just no way in the world that market makers will allow this clean of a top. That's a quadruple top. Okay. I've never even heard of a quadruple top. Look at this. I mean, you have 4 different daily candles basically right there at that same point. No way in the world that they're going to allow that liquidity to just sit up there. So I think we're going to take that one. I think we're at least going to take this out here, but very likely we take this out here. What does that mean for interest rates? Well, if we look at where we are right now, 99.64. If we get up to here, that's 100 basis points. About every 300 basis points is 1%, roughly. Okay. Roughly. So we're talking about, 3/8 to 0.5% that we could see gained in interest rates just off of this little move. Now, if we really want to see what's going on, you got to zoom way out because bond prices were way higher than this. Okay. We're still way down here in the doldrums. I mean, trying to get out of the dungeon as far as bond prices go, so we can see those prices go up and see mortgage rates go down. It's the whole reason I track this is simply to manage lock scenarios. We relocked multiple rates this week too, by the way. The rates are dipping a little bit. Nothing crazy, but I've got people in some longer escrows, and if I can save them 0.25% or 0.3% by the quick relock, no brainer. I'm going to pull the trigger on that every single time. Oh, one-man production issues. Is it a channel or descending triangle? I don't look at that stuff. So Rob, I do TA very differently. I only look for a specific price signature, which pretty much controls all support and resistance. And that's really what I'm looking for. I also do standard deviation calculations, but I don't have that on this particular chart because this chart is just for mortgage bonds. You have to pay extra for this. It's not ideal the way it's structured, but allows me to do these analyses. So, so that's what's going on there. So where are rates? Well, you've got FHA, VA in the low sixes, right at 6. In fact, we even had them dip into the high 5s for the right scenario, right? Right credit score, right loan amount. We are seeing rates a little bit higher for high balance. So any loan amount that's above 766, 550, you're seeing rates are a little bit higher for that now. Whereas with FHA, VA, for example, a lot of times the rates are the same, whether it's high balance or not. That's not the case right now. Longer term locks also being punished right now. Lower credit scores also being punished right now. Where we had the opportunity to relock multiple people this week, my lower credit score borrowers, the rates didn't change. So this is the thing. It's not linear. It's one of the more complicated algorithms that exist. What are interest rates? A question that we get all the time. What are interest rates? Man, that's a long-winded answer. There's just no short answer for that because there's so many different rates for so many different scenarios. It's so hard to say. What is today's interest rate? There's no such thing. There is no such thing. So we look at the market action index, very bullish. We look at mortgage rates. The future is bullish. Right now, people are still going 6-something%. What? Can we get rates in the 5s? I think if rates got comfortably into the 5s for conventional, we would see bananas marketplace. The market is already very strong though. And what are they talking about? They're talking about adding first-time buyer credits and all these things are just going to bring more buyers to the table. We need to offer credits to sellers. If you really want to get the market square, offer people a credit for selling. Hey, you get a tax credit up to $50,000 if you sell your home. Or hey, you get an extra up to $200,000 tax-free in additional exemption on top of the $250,000 or $500,000 that already exists, depending on whether you're single or married. We'll give you another $200,000, or do something to incentivize sellers to go, well, we don't have to pay tax, so we sell it now. We need sellers. Let's see. Do I have something on that? I think I did. Let's introduce some articles here. The very best time to sell your home if you want top dollar. If you go and you look at the data, it will show, particularly in San Diego County, that the highest price per square foot that is paid year after year after year is in April and May. Highest price per square homes will sell for the highest price per square foot. My key metric, my number one go-to metric, April and May, which means you're in contract now. So this is right now is actually the best time to sell your home. If you're going to sell and you have the flexibility to pick whatever date you want, right now would be a great time to do it. And the market needs you to do it. So I'm not saying take one for the team. Also, do what's best for you. But you can look at it. I put this article in here. I'll put it in the description. And this is from Realtor.com. Now, they say this is national, not just San Diego area. This week, the week of April 14th through 20th. So that's actually best time to sell. So if you list it for sale, then you sell it within a few weeks. The week of April 14th through 20th is the best time to sell. That is, if sellers want to see lots of interest in their home, sell quickly, pocket some extra cash, according to Realtor.com data. Here's what they said. The third week of April brings the best combination of housing market factors for sellers. The best week offers higher buyer demand, lower competition, fewer price reductions than a typical week during the year. So how many years have I been saying this? And here it is. The data's here. Now, you could have looked this up on your own like I did many years ago, but now is a great time to sell. How about that? That one's going to be a good one. We did see this. The weekly mortgage demand has kind of waned a little bit. What I personally noticed is that buyers are just a little bit slow to act. They don't quite understand what's going on in the market. The buyers who get it and who understand what's happening right now, the overall pricing out that's taking place of pretty much everyone from being able to buy a home, is something to not take lightly. Now, I sent out a message telling people that I expect rates to go lower, even though the big boys all shifted their predictions for interest rates higher. I think they're wrong. Why? Well, I just showed you my technical analysis for mortgage bonds, which is what directly affects mortgage rates. That's my main reason. Secondarily, I think they're getting overly bearish because they're seeing things like this. Fannie Mae, the big banks, they're seeing this and feeling this and taking it the wrong way. Weekly mortgage demand dropping doesn't have really anything to do with what's going to take place over the course of the next 6 to 12 months. Other than it just means that more people are pushing to the right. I've been telling you about pent-up demand and what's going to happen when we see that rate. And I don't know what it is. If it does have to, rates have to get to the 5s, 4s, I don't know. But at some point, there are a lot of people who have put buying on the back burner, who have signed a lease for a year and are coming back around. They're going to be entering the marketplace. I do expect that to happen. I just don't know what rate that's going to be. So you see here, average contract interest rate for 30-year fixed rate mortgages increased to 6.97%. Now, this is from last week, so it's dropped since then. And my rates are lower than these anyway. But what it's showing you is that applications for mortgage home purchases fell 1%. And they were 14% lower than the same week a year ago. Part of that has to do with, dwindling inventory. Part of it has to do with buyer exhaustion. Part of it has to do with buyers who also are sellers being stuck. A lot of that's still going on. At some point, they're going to let the dogs out. Okay. And I don't know what rate that is, but it's definitely coming. Median $1 million shack. Yeah, you can get your $1 million shack for sure. But, that's what I see taking place here. And so people are seeing this. And for some reason, people kept telling me last week, I keep getting things in the mail, or I keep seeing things about how rates have dropped. You're seeing advertisements from mortgage companies that are in desperation. I spoke to a couple large mortgage companies and just know the people who own them and run them, and they've been hurting. This has been a rough year. Okay. So they're trying all kinds of things to try to make things happen. And it doesn't surprise me that they would put out an announcement, oh, rates have dropped. It's just a way to get people to call. And so you got to no mortgage solicitations are genuine. They're like 99.9% disingenuous. If you get a mortgage solicitation in the mail, set it on fire, throw it away. Don't even call them to tell them, take me off your list. They consider that a win if you call them for any reason. Don't even do that. Just go to optoutprescreen.com, opt yourself out permanently, and throw it away. It's really that bad. So trust me on that one. And then you got this. You remember, I did a whole video on this. Cost of waiting. How much does it cost you to wait? There's a really easy way to figure that out. Well, we can see how much it has cost you so far. We don't know what the future holds. Nobody does. But if you've been waiting to buy for like 3 years, you have cost yourself so much money, it'll make you throw up. If you have a strong stomach, then you can go back and watch that video. But you can test it by using the Zestimate. So you go to Zillow, you pull up the Zestimate, pull up any property you want, see what the Zestimate was 3 years ago or whenever it was however long it is you've been waiting, and see how much it's cost you. A lot of people are finding that it costs them $5,000, $10,000 a month. These properties have been going up in value in the last few years, even with the spike in interest rates. What do you think is going to happen when rates go down? It's going to be bananas. February home sales spiked 9.5%, largest monthly gain in a year as supply improves. What does that mean? What's important about this? What's important about this is that we had a little spike in inventory and it just got absolutely gobbled up by the market. Absolutely gobbled up. So everyone who is saying real estate crash, this and that, prices are going to drop, blah, blah, blah. What those people need in order to be right is they need tremendous amount of supply to hit the market. We just saw a little spike in supply and the market just came in and was like, give me that. Didn't even give it a chance to chill. Not even letting these places sit. Just gobbled them up. So almost a 10% increase. Largest monthly gain in a while, in a year. So here's a couple highlights. And we are live on many of the things here. The Book of Faces, LinkedIn, X. We're live on X right now. We're live on YouTube as well. Drop a comment, say what's up. Rob, appreciate you chiming in. NBA's chief economist addressed the industry challenges in the housing during his testimony for the House of Representatives. There was a financial services committee. They asked Mike Fratantoni of the Mortgage Bankers Association to come in, and he said, here's the issues we're facing. These are important things to understand. What are the macro implications? Always drill down. Start at the top, macro, drill down, micro. At the end of the day, real estate is location, location, location. Never forget that. But there are macro headwinds to keep an eye on. Inventory shortage. Market significantly lacks the units needed to meet strong demand. That right there is why you're not going to see a crash. That's why we haven't seen one. Lots of negativity, lots of bad things taking place. Housing market won't go anywhere. Think about that. Between COVID and all the crazy geopolitical stuff that have gone in the last few years, look at what housing's done. Lock-in effect. This is what I was telling you earlier. Homeowners who are just absolutely stuck, hesitant to sell because of higher rates than what they have. This reduces inventory and reduces units, just transactions. Hurts a lot of people in that regard. Basel III endgame concerns. Proposed increased capital market requirements could destabilize housing finance by shifting the mortgage market away from large banks. What is that? The heck is he talking about? Well, banks are... Do I have the bleep button over here? Banks are... Why? Well, because banks, when you give the bank money and you're making 5% in your savings account, you're a liability to them. They're having to pay you that. They're paying you compounding interest. And then they're trying to go and loan it on simple interest loans. It's a tough gig. Unless interest rates are really, really low. Then it's free money coming in and all profit going out. So right now, banks are stuck with really, really ugly losses on paper. Really ugly paper losses, really big issues. The Fed has gone as far as to essentially remove all reserve requirements. I mean, banking industry is fragile. That's French for go long, in case you didn't know. But it's on eggshells. This is part of the reason why you're seeing cryptocurrency run up. We'll look at Bitcoin here in a second. We'll look at all the stocks and stock market here in a second. But there's a lot of issues there. So because of proposed increased capital requirements could destabilize housing finance. Meaning, if you guys say we have to have capital, we aren't going to be able to do this because we don't have any. I don't feel safe necessarily ever about having money in banks. Like, I don't think it's just like they're going to give it to me something goes awry or whatever. We haven't seen any reason to really be concerned about that. We've seen banks fail. The FDIC has come in and insured people well beyond the 250K. I mean, they've come in and saved people with it. But there's major issues there. And now for me, as a mortgage guy who's in the wholesale side, I'm like, bring it on. Let's hook some people up. But there are issues with that. That is a concern. And I want to make sure that I'm clear about it and that I don't not talk about it. Rising property insurance costs, definitely feeling that in the state of California. Property insurance, it's been pretty wild. Thank goodness for the California Fair Plan. A whole bunch of people wouldn't have been able to buy houses. But even that got so backed up that it was taking weeks at one point. That's crazy. That's craziness. So this is true. This is a reality of what's going on in the housing market. I think it's important to understand all of these factors and how they play in. Now, if financing becomes more difficult to get through traditional banks, how much will that hurt the market? There's so much. Let me just explain. There's so much like horsepower in the mortgage market that's unused right now. So many hungry mortgage professionals who can churn out business. I don't think you're going to see any impact on the market from that, except potential fear run on banks. Some stocks might get murked. That's possible. But I don't think it's going to hurt real estate in any way. It just doesn't make any sense that it would. Let's see here. Which one is this? CNBC has been super weird lately about stuff like this. Like, where'd my article go? Heck with you guys. Oh, this was this guy. Yeah. So Redfin CEO, he was talking about the lawsuit. He seems to be pretty excited about it. I've never heard this guy speak before. Seemed like a nice guy, but didn't seem to be concerned about it. Said, hey, we do things differently. Redfin, we're prepared for it, whatever it is. Remember, this $418 million settlement, though, is proposed. It's not done. Proposed. Okay, let's take a look at a couple things here. And we'll look at interest rates too. Let me pull mortgage rates over here. So here's the average mortgage rates across the nation right now. I'm way lower than these on most fronts, like FHA, VA, for example, right here. Let's look at that, almost 6.5. We're at 6% for 30-day less lock, detached, 780 credit. You can get 6% or even slightly less. I've seen 5.99 a couple times. Jumbos, we're below that about 0.25%. On conventionals, we're below that about 0.25%. Some of my rates are lower than these, but this show you the national averages. I think it's important to see that. Take it with context. Hey, this is where rates are at. All right. But here is a better picture. Now I pulled this up going back, just going back to 2011. So the bottom of the market. So we could see what have interest rates done. Okay, now let's take a look at this one and let's compare this one to what sales prices have done. I think that's a good comparison. That's a fair comparison, right? Because what a lot of people believed, what has kept them sidelined the past year and a half at least, is that they say, well, if rates do that, then prices must come down. Look at what's happened though. As rates have gone up, boom, prices also gone up. Now, you might say, well, hey, look at prices there, Derek. It looks like you made a lower low. It looks like they're heading even lower. You are seeing that. The median price has been decreasing. So it was up, it peaked Q4 2022, 552,000. And then now in Q4 2023, 492,000. So down about 10%. Overall, 10% pullback. So it's not like it's completely unaffected. But if you look at the trend, though, the trend still higher for sure during that period. And this vertical gray line right here, that's COVID. You should be able to see that on both of these. So you can kind of get an idea of where that mark is. From that point on the price side, price is just going up. Over here on the rate side, rates went down right there, which started that initial push. But even as rates climbed, so have prices. It's an important myth to dispel because if you really want to make smart decisions about real estate, you have to actually look at the information. You can't try to say, well, common sense. No, you have to look at what actually happens. Some of the stuff is counterintuitive. So it's important to pay attention to that. Okay, let's get some daily charts here. What do we want to look at first? The coin bits. Anybody have a suggestion? A wife in effect? If I have a suggestion on a stock, I'll do one like suggestion if you guys want to look at one. I'll look at the Bitcoins. All right, what's going on right now? So this is an important line. I have several buddies who are really deep in Bitcoin, and I'm really doing this video for them. They've been following along with me. This was a really, really important point just a few days ago. If we go back to last week, 63,800. That's why I drew that line there. This order block here, this is the price signature that I look for. It's an order block that was originated out of a fair value gap. Those are very strong supports in general. The wick here, the closure of that candle was crucial. It was breached once. That turned out to be a bear trap. You can see the immediate response afterwards, just gobbling up. The market makers just absolutely gobbling up the stops of all those bears who jumped in and tried to short it there. And then it held. And you can see multiple days it held. And when we got this hold right here, I was like, man, that's really good. Boom. There it went. Now what's happening? Okay, so now we're up here. We've actually touched the order block from the all-time high that was created right there. Okay, I'll draw this a little bit more clearly. This is the order block, bearish order block. All right, look, nothing but wicks. After this first candle closed below, boom, wicks up through it, back down. Now it comes up, touches it once, sells off, touches it again, sells off into what? Bullish fair value gap right here. So what we're kind of expecting here for Bitcoin is continuation higher. Might be a little ping pong here. A lot of people have been waiting to see like, hey, when is this alt season going to take place? When are we going to see XRP go to $10? All my buddies are holding that, poor guys. I mean, it got to 70 something cents, I think, but there's just too many. There's so many XRP out there. There's billions and billions and billions of XRP. It's just too much. It's too much supply. Remember, Bitcoin only 21 million. That's why the price is so high, and it's not all fully mined yet. But there's a lot of issues with supply of Bitcoin right now, and there's a lot of really interesting things taking place, like gold miners saying they're going to buy Bitcoin for the balance sheet. What MicroStrategy is doing, where they're issuing convertible notes that convert into stock to get free money to buy more Bitcoin. They're not using it to grow the business. They're not using it for expenses. They're not using it for expansion. They're not using it for new office space. They're using it to put an asset on the balance sheet. So as the price of that goes up, the price of their stock goes up, and they do the same thing again. It's like an infinite loop. I'm just waiting for more companies to like realize that they could do the same thing with their balance sheet and just have the market give you the money. Like, just issue new shares. Who cares if you dilute it? Who cares? You're taking those shares that you're issuing. So let's say you're Apple, for example. They have a ton of cash. They should just buy Bitcoin anyway. Let's say you're another company that doesn't have as much cash, but your stock price is doing well. Well, you just issue some shares, get free money, right? Take that, go buy Bitcoin. You're not wasting the money. You're putting it as an asset on the balance sheet of the company. So it doesn't actually dilute the company. While it does dilute the total share count, it doesn't dilute the company because you're adding an asset. And this is something that only MicroStrategy is really doing right now. Michael Saylor, who will probably go down in history as the smartest person of all time because of what he's doing with this. MIT graduate, owns a tech company. He's a billionaire. One of those people you probably haven't heard about. Saylor is the man, and he's running circles around everyone. In fact, MicroStrategy is now, I think, in the top 300. Will be in the S&P 500. So if you buy the S&P 500, whether you buy SPY or IVV or any one of those ETFs, you're going to be buying Bitcoin, whether you like it or not, because you're going to be buying a small chunk of MicroStrategy, and they have Bitcoin on their balance sheet. So I've been waiting to see more stuff like that take place in this cycle, but the halving is about 3 weeks away. And I am expecting right now a little bit of consolidation, probably in this range here. But I do expect to see higher prices. 87,000 is where I think we're headed for Bitcoin. So that's my target there. I have some other altcoins here. I actually own some Bitcoin Cash too. And today is a really interesting day for that. Up over 10%, while most other cryptos are down. I also own this Avo guy, which is up a handsome amount today too. But let's look at Tesla. This is my main one of my main convictions besides Bitcoin is Tesla. Tesla gapped up big time yesterday. Had kind of a weak day, rejecting. There's so many gaps in this stock, but the bottom line is, we were bouncing off support here, and we're still in this huge downtrend. Okay, huge downtrend. Which here's my standard deviation calculation. So my low end target for Tesla is 129. Well, Kathy Wood from ARK Invest, she comes in, just guns blazing a couple of days ago. And she's like, hey, I'm buying all the Teslas. I think it was when it got to 160 in the 160s. That's where Kathy Wood came in and purchased a bunch of Tesla. And I have the same conviction. I'm buying, pretty much every time it's a down day. If it's really red, whatever, I'm in there and I'm buying more. And I'm accumulating. I've got capital set aside to accumulate more Tesla. What you're seeing right now is a growth stock that's at a high multiple, which doesn't have any great news right around the corner. They have said that they're not going to issue guidance on what the expectations are for this year as far as deliveries are concerned, which is crazy. But my guess is that it's not good, right? It's not good. We're seeing some things that are not good taking place in the whole automotive space. But what we're also seeing is we're seeing Tesla innovate all kinds of things in the AI front, robotics, the robots. I mean, just crazy stuff that nobody else is doing, and they're absolutely dominating. That is going to come to fruition at some point, and that's what I'm betting on. So I don't mind this downtrend. I don't mind any of this stuff. I don't mind the FUD. I don't mind the sell-off one bit. I have a long-term conviction with Tesla, just like I do with Bitcoin, and I will continue to do exactly what I've been doing on this, even though the chart doesn't look great. Doesn't look like Meta. Look at that thing. Unfreaking believable. They got me with this right here. This is what got me out. That right there. That change of character where we got the lower low, and I was like, all right, it's over. That's when I got out. Freaking so stupid. $200 a share ago. Why'd I sell it all? So dumb. Keep some. Don't sell it all. You're a fool. That's all right. We almost made 300% on that investment, so I can't be too mad about it. But at the end of the day, you got to learn from your mistakes. So this is Meta right here, which is basically had a huge gap up, and it's just kind of trickling. Now, there's a few things with Meta as far as lawsuits. There's copyright issues. There's a whole bunch of things that they have kind of coming at them. We all know Zuckerberg is not afraid of like legal trouble or like stealing someone's idea and then writing a big check to them later. Doesn't have a problem with that. I still think the metaverse and what they're doing with that and the monopoly they will have on that is still makes Meta a good bet. I wish I was still in. I wish I wasn't a dummy who sold all my shares, but here we are. Now let's take a look at the overall market. Let's look at the S&P. It really does appear, we got the fake out of the channel, right? Fake out lower. That created a perfect standard deviation level. And so far, there's been no like rejections. And we didn't get a rejection at -1. You always get a rejection there. Just immediately plowed right through it and then became support. Look at that. And then we didn't get a rejection at 1.5 either. Just plowed straight through that. -2, didn't get one there either. Gapped over. I mean, it's crazy. Even at 2.5, didn't really get a rejection there. So that means that very likely the S&P is headed for completion of the standard deviation, which is 55.47. That's 300 points higher than where we are today. That's a very high likelihood that that's where we're headed, which sounds insane. And you never know, right? You never know. But if you look at NQ on the daily, you can see that same move on NQ. We've already touched -4. Okay, it's touched it several times. It keeps rejecting from it, but that's -4. The black line up there, that's -4. It keeps rejecting it. That usually means we're at completion. But obviously S&P isn't there. So it's possible NASDAQ could consolidate while S&P runs up. We've seen the Dow's been running crazy. And it waits for it to catch up. Who knows? Who knows? But I don't think there's a whole lot left if we talk about risk reward from a stock standpoint of the overall stock market. Individual stocks, I think there's definitely some stuff there. But overall stock market, Pretty frothy. Pretty frothy. We'll see what happens. All right. So we got through that, got through these. And we showed that. All right, perfect. All right, team. Here's the deal. Y'all know the story. You know what's up. I like to hook it up. I've been hooking people up with wholesale home loans, no lender fees. You know how we do. Don't pay any of these stinking fees. Quotes are quick and easy. You don't need to pull your credit. You're shopping for a home loan. You value communication. You value consistency. You value availability. Give your boy a call. Shoot me a text or send me an email. I'll hook you up like a tow truck. Happy hump day, my friends. I'm gonna get back to the grind. You'll have a great evening. And I'll see you again soon.